Alright guys, let's take a look at Bitcoin to the US dollar. I finally got done moving and I have a lot faster internet than I had at the old place. So that makes me optimistic of actually making more videos because I don't have to wait 8 hours for them to upload, for like a 15-20 minute video. So I'm excited about that. So this is hopefully going to be the first of many. I can't promise anything because I am day trading full time. So I have to make time for these videos and getting settled into the new place and everything. So, but we'll look at Bitcoin to the US dollar today. It seems like a year's worth of price action since the last video I made. I think I might have made a video somewhere around here when we were somewhere in this ranging area right here. But so the first thing that I want to look at is, that I'm big about fib levels, and there's no uh, there's usually no coincidence around where there is a pivot. And so what we need to do is try to understand, you know um, what the market makers are obeying when it comes to fib levels. And so the first thing that I want to look at is coming from the all-time high down to the all-time low of this bear market. So you can see from the absolute low at 31.20, we went basically straight to the golden zone of this entire bear market if you go from pull your pivot from the all-time high. And so, that's obviously very interesting if you're someone that is uses fib levels to make decisions with. And so the reason that that works is normally, and if you've seen my previous videos, these fib levels work usually at the zero point 0.5 fib and the 618 as strong areas of resistance or support. So on the way down, they act as support, and on the way up, they act as resistance. And a lot of that is due to bots. These bots are programmed to sell at these fib levels. So all the way up, I was looking at every one of these pivots. I would pull the pivot high from here, and I would, we broke that 618. I would pull it back one. We broke that 618, and I would pull it back again. You just keep going back. You keep going back a pivot until eventually you can see where we had a nice rejection off of that one. If you pulled the pivot from here, we had a pretty big rejection to the tick on the 618 here, and that's where we had that flash crash down to like 6100. So that was a strong reaction there. And so once we broke back through here, that was a sign that we were going to continue. At this point, a lot of people were drawing head and shoulders right here, which I was too. I was looking at that as possible breakdown. But the fact that we rejected hard and then came back to get back through this, that tells me that, for one thing, those bots that were selling here are stopped out. They're no longer selling. So what's the next pivot that they're going to look at? So you just keep pulling this back, and you pull it back to this pivot. You can see that we got through. It didn't even really slow down. We might have got like an initial rejection on a lower time frame here, but we basically went straight for the ultimate 618 of the entire bear market and hit that. Went through the 618 and hit the 6.5 to the tick. And then got this nice rejection, and it even came back up here to hit it again before coming back down. So I wanted to just point that out before we got into anything, and just so you'll know what to look for whenever we start getting a nice recovery on a bear market. And this goes for any time frame. It doesn't have to be a daily chart like this. It could simply be what I'll show you in a minute, just the retrace of this dip from the peak of this run down to there. You can look at see where we're going to get resistance on the way up to potentially roll back over. So you can use that on any time frame. but the 618 to 65 fib is a crucial area, well, where bots will be set to sell. Okay, so I'm going to go ahead and take this off, and we'll look at the Elliott wave count here. So the first thing that you can do, and as you see me probably do in other videos, is just get the best count that you can just from eyeballing. At least that's what I do. I try to get the most obvious count because usually that's what's going to be respected. If it's something that's hard to count, most likely it's not going to do you any good in the first place. So try to get something that's obvious, and to me this is pretty obvious that we have a 1-2. I'm going to show you why I think this is a 3-4 right here, and then why I think that we've probably finished in a 5 right here. And symmetrically this checks out for the most part. So the 1-2 is pretty straightforward. You can't really argue with that. You got the impulse for the 1. You come down, the 2 gets down to I believe the 7/8/6 of the 1. So if we did a fib like that, I'm gonna have to add the 7/8/6. Yeah, so you can see it hit the 7/8/6 and gathered support there. So the 7/8/6 offered support, and that's kind of typical of especially an extreme sell-off like this. You got to imagine how much momentum the bears had here. So to be able to turn that trend back around, the 618 is not always going to hold, and the 2 from Elliott wave perspective can actually come down as low as the start of the 1. It just can't surpass it, because then it would invalidate the count as this being an impulsive 1-2. But the 7/8/6 between the 618 and 7/8/6 is very typical of a 2. So we came out of here, which with a perfect 5 subwaves here for looks like a 1 and then a 2, and then what I would count as a 3, 4, 5 that make up the 3. So let me change this real quick, and so it stands out. Okay, so we have a 1, and this is all part of the sub 3 wave here, or this is all part of the 3 wave here. Now let me change this so you can see it. Okay, so now you can see these subwaves in here that make up this third wave. So from the 2 to the 3 you have 5 subwaves. And see, this makes sense because in Elliott wave the third wave is typically the longest, but it's never the shortest. So in this case it is the longest. From what I can tell, there's a clear 5 waves that make up this third wave here. And then I want to go through some of these corrections right here because they don't look standard, especially these 2. Now this correction was pretty standard. It looks like a B, C for a 2. Now we got a 1, 2, 3, 4, 5 that makes up this sub 1 wave, and then we come down in a B, C for the 2 sub wave. Now when this 3 completes, we have this we have what's called a running flat. And a running flat, for those that aren't familiar with Elliott wave, is basically it's an ABC correction, except the fib relationships are different. So whenever you have a 5 wave impulse, so in this case we had a 5 wave impulse, 1, 2, 3, well, this third subwave right here has a 5 wave impulse within it. Now the 4 is going to correct from the 2 to the 3 here. So there are 5 subwaves within that 2 to 3. And so what you would expect typically is a correction that would look like this, an ABC. But but what ends up happening, instead of an ABC like this, which normally will have some kind of fib relation, where what you would expect is, well, let me do it like this first. What you would expect is the B with trace between the 618. Let me blow this up so you can see it. What you would expect is, and I guess I should probably label these too. So that's a, that's a B, and that's a C. Okay, so and that's correcting this 1, 2, 3, 4, 5. So you would have a typical ABC correction where the B typically goes between the 618 and the 786 right here. And then your C, what you would look for on that is you would use your fib extension tool. You'd come here and do your fib extension. So let's just say the B ended there. You would go from the start of the A down to the end of the A up to the end of the B. And what that would do is project down where you would have a target. And so high probability zone is for the C to end at the 1 to 1, which is just this 1 right here. It's the 1 to 1 extension. Basically what that means is your C leg is just as long as your A leg, and that's what that 1 denotes right there. But the ultimate bearish target for a correction would be down here at the 1618, and you've probably heard me talk about that number on fib extensions before, normally on the way up. But those are the relationships between the A, B, and C in a typical correction. Your A comes down to some fib level of this move right here, and then you get a bounce where the B goes between the 618 and the 786 of the A wave, and then you have a C wave that is high probability going to hit the 1 to 1 of the A leg here. So your C leg is high probability at least going to be as long as your A leg and hit this 1 to 1, but you could have an ultimate target down here at the 1618. So those are the relationships for a typical ABC correction, and what you would expect in a running flat. As you can see here, you have an A, and then the B goes higher than the top of the 3, and then you have a C that doesn't even go as low as the A. So what that looks like is something like this. Your B makes a higher high, and your C does not go any lower than your A. And so that's what you would be looking at. It would look like that. And the thing is, this happens in very bullish markets. And so since we're in a very bullish market, we're in a very bullishly trending market right here. The bears just could not bring this down. There was so much demand. We caught support on this 21-day EMA, and the bears just could not push it below that. So you end up with a very bullish correction. And if you're able to pick up on that early, you can get a good entry, especially seeing that we're gathering support on the 21-day EMA. You could really get a good entry and know, this thing's probably going to take off because this is a very bullish correction. A lot of people were looking at this as a head and shoulders. So it's quite obvious when you look at it. I mean, it looks like a head and shoulders. I drew it like a head and shoulders once we started coming up here, but we never rolled over. We just kept going higher. We broke the high of the left shoulder and just took off. Broke the highs here, paused for a minute, and then just ripped. So that is one thing that you can look for when you're looking at these heavily trending markets. And I believe Binance token did this similar thing. It had a couple running flat corrections in that trend because it just went on a tear. Went up whatever it was, 10x this year. So it had a really good run, and these running flat corrections are going to be common in these trending markets. And so what you'll end up with is some kind of channel like that, where it tends to be a parallel channel, and then you come out of that parallel channel, bullishly and break out. When everybody, all the bears are thinking that it's going to be, a head and shoulders like this, but the bulls have other things in mind. And so what happens is, let's see, I'm trying to change the color here. We end up taking off in a rip. We come back and retest this channel before taking off, and you can see that clear as day. You can see how we retested that channel there, and I'll show you on here how we did that. So you can see how we had a channel just like this, how I have it drawn, and we came up, we had the left shoulder, the head, and then started the right shoulder but never rolled over. We ended up taking off and getting above this parallel channel. It actually looks like we might have not gotten above it and retested like this. We got a little bit of resistance and then kind of staggered for a minute before we broke through. But breaking above this parallel channel line was very bullish here. You know, that was a signal that this thing was just going to rip. So I thought that was interesting, and I think it's good for people to see these patterns and how they play out. If you see a head and shoulders that everybody's calling that's going to break down, and we start heading up, you know, maybe it's worth looking at the upper channel here, because if we break above that, basically what that means is the correction's already complete and that we were going in for what looks to be an extended fifth wave within this overall third wave here. Okay, so let's now look at the fib relationships between these subwaves, just to see if everything checks out. So if this is a 1, 2, where would we expect the 2? Well, we would expect it between the 0.5 fib and the 618. Obviously, you know, this higher degree 1, 2 right here went to the 786 because of an extended sell-off. You know, we're trying to recover after this extended sell-off. But now that we've changed direction on the trend, our first subwave, we would be looking for the 2 to end between the 0.5 fib and the 618. And if I blow this up, you can see, let me make sure it's right on there. Okay, so from the high to the low of this sub 1 wave, we came straight to the tick of the 618. That's where the algos were defending. They were buying at this 618. Came down and almost got a touch again before going ahead and starting this 3 wave. Now that looks pretty technical, so what we can do from here is see, you know, if we went back in time and we were starting up on this 3rd wave, where would you look for the 3rd wave to complete? So you'd expect resistance in the high probability zone between the 1618 and 175 fib extension. And you can see we had a nice wick shoot through that, but we rejected and closed below it, and then eventually got through that. And so all this chop really took place around this high probability zone for this 3rd wave to finish. So that, you know, that's no surprise that this is a 1, 2, 3, and then we're looking for the 4, and this was the running flat that we just discussed. I'll take this off, and so where would you expect a 4 to retrace? So you'd be looking for the wave 4 to be between the 382 and the 50. Now that would be in a traditional correction where you have a A, B, C coming down, and you would expect somewhere in here to get support. Whereas this was a running flat, we actually got support on the 236, which is pretty common. You know, we had a shallow initial retracement here, we broke the highs for the B, and then the C came back down to the 236, and we continued the trend. So there's nothing abnormal about that, and a running flat correction like that, it tends to be shallow and only make it to the 236. So the people waiting for the 382 to 0.5 fib bids to get filled, you know, were left behind whenever this started to head up from there. So far so good on as we're going through this count on fib relationships. And so this was obvious extended 5th wave right here. You can get some subdivision on this if you drop down to lower time frames and be able to dig out like a you know, a 1, 2, 3, 4, 5 within this parabolic rise right here. You can easily get that if you drop down to a lower time frame. But what I would want to look at now is, since it looks like we have a 1, 2, 3, 4, 5, these subwaves making up this 3rd higher degree wave, what you could look at now is see, you know, back here, where would we be looking at levels for a 3 to end? And when you do a fib extension, so if I'm doing a fib extension from this higher degree 1, 2, where would the 3 be? So this white 3, obviously you would think it would be in the high probability zone, but since this is such a bullish count, the way that this played out, we went to some of these very high fib extensions, and that is not uncommon in crypto when you have these parabolic rises. And you've probably heard me talk about this in some previous videos as well. when I was looking at other coins, where when you get this third wave, it tends to hit these high extension levels of the 1-2. And so we essentially hit the highest extension level that I have on here for the standard settings for the fib extension. We basically got up here and even got above it and really just kind of ranged around that before going up for our fifth wave. And so the next thing that we want to look at is, now if this 3 is complete, where would we expect the 4? Same way with this 4, we would expect it between the 382 and the 50. We didn't get there. We got to the 236 because it was a bullish count. We had a running flat. Now a similar thing happened here. You can see how this correction right here is almost similar as this one right here, where we had an initial sell-off. Granted, this was a very quick sell-off. That was a flash crash. There was somebody that dumped, I don't know how much Bitcoin, and caused this to flash crash. But ultimately, you could consider this very similar to this if you were to disregard that wick. We had that initial sell-off. We made a B that made a higher high here, and then a C that finished right here for the 4. And so if we look at the fib relationships, if we go to the beginning of this 3 wave up to the high of the 3 wave, which is right there, we had a B, C running flat. We had a very similar correction here. So let's see if this probably doesn't parallel channel as well as, yeah, so it's not really a parallel channel. We did have a little bit of similar resistance, breaking this trend line up here, I guess, if you look at it like that, but it's not really a parallel channel like we got down here. But you can see that we didn't even make it to the 236 on the C right here. The A essentially made it all the way down almost to the 0.5 fib on this flash crash. It made it to the 3. It made it between the 382 and the 0.5 fib. So all these people were happy if they thought this was going to be a 3, or if this was going to be a 4. All these people were happy to get their bids filled in here. But ultimately, it recovered so fast. Anybody that didn't have their bids already set did not get filled on this wick. So we ultimately closed above the 236 and formed a B, C running flat, where the C was so bullish that we didn't even get back down to the 236. So this 3-4 is a very bullish 3-4. It's the same exact setup almost as what we had right here, where we had like I was just showing earlier, we had this head and shoulders that was quite beautiful, that was forming, and everybody was looking at that, hoping that it was going to roll over. We had something like that, and what do you know, we have the exact same thing here. Everybody was eyeing this head and shoulders to roll over. We end up taking off out of this head and shoulders. So that was obviously very bullish, and the fact that we didn't get to the 236, one level that I was looking at when we started breaking up out of there was this daily resistance here, where we had rejection, support. We dropped back down below, rejected, and then finally we closed back above that 82.50 level. That's where I was really looking to long, and so I got in right there and was able to catch a good bit of that move, just from seeing history repeat itself back here. And I could tell that it was a very similar correction, and it looked like we had legs to go because we were just on a 4 wave and we had a 5 wave to complete. And so this 5 wave moved up in a parabolic fashion, almost like this sub 5 wave within this 3 wave right here. And so obviously some of the levels that I was looking at was where we had this golden zone right here. I was pulling the fib from this pivot, and that pivot, and I was looking at some of these areas where we could get rejected. So I was eyeing those areas. I don't think that I got out until we really started breaking down. But if you're in my Telegram channel, you saw where I caught this. I caught this almost perfectly, and I've played this move right here almost perfectly so far. Just because it's just a picture perfect correction. If you study Elliott wave and you've seen these patterns enough, it becomes super obvious what's going to happen. And that's why in the Telegram channel I kind of warned everybody that whenever we had made this correction and we put in this wave right here and we're headed up, it was so obvious that this was a three wave and that we were headed right back into major resistance again, that there was a good possibility it could be a bull trap, and I just didn't see the volume supporting us going through this major algo sell level right here. The 618 of the entire bear market. I just didn't see us making it through that. So I actually I longed. Let's see. Let me go down to a little bit lower time frame so we can see it. One thing that I was looking at here when we got up and we made that correction was, once we got that bounce, I was looking at, and pretty much everybody was looking at this, but there was an inverse head and shoulders playing out on this correction. So if you did not see that, that's what this was right here. It's an inverse head and shoulders, and so when that broke the neckline right here, that's when I entered my long, and I closed pretty much at the top because of a couple different things. Obviously, we were approaching this 618 again, and to me, this was a very clear beginnings of a ABC correction, because an ABC correction, not to mention that it looked like this whole wave was done from the beginning of the bull run. It looked like we had finished a 1 2 3 4 5 up here. So I was definitely not bullish on us breaking this major resistance right here after it looked like we had completed Elliott wave count. But the other thing that I was looking at that I was saying right here is it looked like a picture perfect beginnings of a ABC correction. And an ABC correction is typically called a 335 correction. And the reason it's called a 335 correction is because each wave within the ABC consists of three waves, except for the C wave, which is a 5. So you have a 3 3 5. So the A wave is three waves. It's like this, which was picture perfect. And then we were starting up here and we had made two waves, and I said, okay, if we break this neckline, most likely we'll finish up here at some fib relationship from this swing right here, and I'll show you that in a second. So that was three waves there, three waves there, and so now to finish the 335 ABC correction, you would expect 5 waves to the downside. And so that's exactly what we got. Now where we're at right now is can be a little bit tricky, and I'll go through that here in a second. That is ultimately what I expected, and that's what I illustrated as we were breaking out of this neckline, that this could be a big bull trap and that we could put 5 waves into the downside to complete this ABC correction, aka 3 3 5 ABC correction. So that's what I'm talking about in the Telegram channel. If you're not familiar with the corrections, this is a very standard correction. And like I said earlier, when I was talking about the previous correction, the running flat, when I was going through the example of a typical ABC correction, remember what I said here with the relationships. So the fib relationships on this would be, you would go from the high down to the low of the A. If I can get it on there, I can't really see. Now let me put the 786 on here. So what you would expect is for the B to be between the 618 and the 786. That's what I said earlier when I was talking about the typical ABC correction, and that's ultimately what we got. We never got a candle to close above this 786 level. We were between the 618 and 786. So that's a picture perfect B. Now for the C, we would expect 5 waves to the downside, and we would want the C to end at a 1-to-1 extension of the AB, and I'll show you what that is. I'll take this off, and this is what I was just showing you earlier on that typical correction. You do an extension from the A and go up to the B, and if I can get it on there, and as you can see, we had 5 waves to the downside, almost to the tick of the 1-to-1 extension. So this 1 denotes a 1-to-1 extension of the AB. So this would be the high probability zone for the C wave to end. So there's no surprise on pivots. There's always a reasoning behind it, normally associated with fib levels, because there's so many algorithms written to use these fib levels to set their orders. So there's no surprise around why we gathered support right there. So I'll take that off. So everything's very technical so far. A perfect 335 ABC correction. Now, what we need to look at now is the fact that, okay, so we have an ABC correction. It looks very technical, like it could be complete, but is it logical that we would be complete on a correction of this total move? So we have to look at the fib level from this entire move here. So if we look at that, we've only got between the 382 and the 50. I mean, it is possible. It's certainly possible that the correction could be over, but with such a long run, pretty much since, I mean, this run literally started last year in December, and it didn't end until June 26th. So far, we've only put in, we haven't even put in a month's worth of a correction yet for a bull run that has lasted half a year. So I would expect that this could be more complex, and that we could still head down to fulfill some of these lower fib levels, and that would also fill a CME gap, which a lot of people talk about. The Chicago Mercantile Exchange, they have futures on Bitcoin, and a lot of times these gaps on that, if you ever pull it up, you can pull up the chart on TradingView and look, and you'll see how it gaps up on these parabolic rises right here, where there literally be a gap in price action, and normally that has to fill, and there's one around 8,500, which is around the 0.5 fib, which would be very logical if this correction decided to be more complex and we headed down here to get that to close that gap and to hit these lower fib levels. So ultimately what we would end up with is something like this, where we have a higher degree 1, 2, and the 2 would come down here, and then we still have a 3, 4, 5, which will probably carry us into a multi-year bull market. Now let me just change this so we can see it a little bit better. So we'll just make this the primary. Okay, so this is literally the start of the bull run right here. This could be the end of the first wave of the bull market, and so we could be headed to much higher prices, and the bull market can definitely span out a lot further in time. So just projecting out something, we don't know where it's going to go, but it could look something like that. Now, is it logical that this ABC 335 correction that we put in is completing this 6 to 7 month bull run? I don't know. It is possible. I mean, we've made it to 382. We almost made it to the 0.5 fib, but we got support on that 1-to-1 extension that I was showing you. It is definitely still possible that we come down between the 0.5 and the 618, but it will have to be a more complex correction. So now I want to zoom back in and show you what I mean by a more complex correction. So now that we've had an ABC, what you would expect is for us to come out of here and continue the bull market. So we've essentially made 5 waves off of this C low right here. If I go down to a little bit smaller time frame, go down to a 4-hour, you can see these subwaves that we've made. And if you're in my Telegram channel, you've seen where I've been tracking this. We have a 3, 4, 5. Let me change the size on that so we can actually see it. So you can see how that's a perfect 1, 2, 3, 4, 5 off of these lows. So what will we expect here? If we were going to be continuing the run, what do we expect after we complete 5 waves? This will be a 1, 2. Well, where would we expect support at? We would expect it at the we would expect it at the, oh, sorry, I didn't put that right on there. I need to put it right there. So we would expect the support between the 0.5 fib and the 618. So far, we've got a reaction off of the 0.5 fib. There's algos defending there. We've had a nice little bounce, but we are below this 21 period EMA on the 4-hour. I would want to see us get back above that. If not, we'll have to gather support hopefully around the 618, which lines up with previous wicks here and previous candle closes. So I would look for support right here to potentially give us our 1-2, and then we can head up, head up from here. But we have to be able to hold that 0.5 to 618 fib first. I don't know what color to make this. Let's see, and change it to something like that. So this is what I would be looking for. You can kind of see that we've put a little bit of an ABC in right here. So the C, this is very well could be complete on the 0.5 fib. I mean, this looks like a picture perfect ABC. So we could be finishing there and heading up. But if we don't, what we would be looking for is this 5 waves right here would be denoted as an X if this does not hold and we end up making new lows and coming down to to the 8500 level or even lower to get closer to the 618. We would denote this as an X, and so that's where it gets more complex, and we start to look at it's where we start pulling these out right here. So we would have something like, see if I can find it, so the WXY, where this ABC right here was the W, and then this could be the X. Typically your X, it'll be some fib relationship, and I'll show you where it hit here in a second. But it'll denote as a failed impulse wave, because if this breaks down and cannot hold this 0.5 or 618 fib, and it starts to break down and ultimately break these lows right here, what you would expect is a Y to come down to some level down here, and that Y would consist of 3 waves. It would be an ABC basically, like that. So you'd have a 3 wave that ends this correction in a WXY. Similar as we had 3 waves here in the W, the X would be 5 impulse waves that failed and we ended up making new lows, and so you'd end up with 3 waves down. And obviously this could look something more like this. It could be drug out a little bit more in time. There's no telling. There's a bunch of different ways that it could play out, but obviously one tell is waiting to see if this 0.5 fib and the 618 is going to hold. If the 618 doesn't hold, especially since we have support right here and right here, you can see that that's kind of like a hot level right there for buyers to step in. If we can't hold above that, honestly, I think that this might be in play. This ends up being an X, and we end up having to put a Y in, and we put a 3 wave structure in. And so what we would be looking for is for this this last leg within this Y to complete, and it'll be like a 5 wave structure down, just like that. So that's what you would actually be looking for, and we could end at 8,500, or we could make it all the way down in the 7,000 range. Who knows? But you would be looking for 5 waves to complete after you get this like zigzag structure coming down. And so that would be more of the complex correction, which would make more sense if you zoom out and look at this. When you look at this holistically from the beginning, let me go back to an 8-hour. You can see how that's a little more symmetrical. That we have a 1, 2, 3, 4, 5, and then instead of taking 1 month, we maybe take 2 months to correct this 7-month bull run. And we would get down between the 0.5 and the 618 fib, which would be the hot box range for this large macro scale 2 to finish. And that's where you would really want to be as a bull, expecting and anticipating this bull market to continue. You would really want to be averaging in here. So I hope this helps. I hope this gives you some kind of idea of what to expect. I'm going to try to make more videos, like I said. But right now, what we need to do is hope that this 0.5 to 618 fib holds right here, which I actually had an order that got filled on the 0.5 fib because I want to be with the algos. Whatever algos are buying right there, I'm just going to get behind them. I'm going to ride their backs. If the whales want to keep pushing this up, I'm going to get on their back and and ride the waves with them. So I got half of my position at the .5 fib. I've actually already got filled down here. If you're in the Telegram channel, I was saying if we broke above 9.6K down here, that I would long and target 11.5. We didn't quite get to 11.5, but I did open the long down here. So I'm actually just adding to my long right here on the .5, and I'll add at the 618 as well, and I'll have a stop down here if we start to break down below the 618 to get out, and I'll probably hedge short at that point to ride this down to where I would believe we would probably at least close that CME gap if we can't hold the 618. So that's what I'm looking at. If you're not part of the Telegram channel, look in my description on this video and I'll have the link to that, and you'll be able to get my up-to-date thoughts on Bitcoin and what I'm doing, because I'm actively trading this. I do this full time, so hopefully it can help you guys make better decisions and you can learn a little something from my thought processes. So we'll keep an eye on it and see how it plays out. I'll see you guys next time.